Hey, family. Happy Sunday. I hope that you've had a fantabulous weekend and you are getting ready to start off an amazing week next week. For those of you that don't know, my name is Timalyn Bowens and I'm America's favorite EA. And if you're new to me, my page, if you're on the YouTube channel, I'm also the owner of Bowens Tax Solutions, which is a Louisville based virtual firm, and we specialize in stepping into taxpayers' shoes to resolve their IRS problems. Now, with that being said, we are right around the corner from Christmas. Like literally, you go around the corner, Christmas will be there. And this is a time of year where people deal with seasonal depression, but also financial stress and strain. Maybe you can't do what you'd like to do financially for the holidays. Maybe the holidays and spending money for that is the furthest thing from your mind because you're already in some type of financial situation where just your day to day bills, you know, are somewhat of a struggle. So, again, if you're not new to me, you wouldn't know I have a podcast called Tax Relief with Timalyn Bowens. And this past Friday, an episode released, and it was about temporarily placing your collection account on hold with the IRS. And when I shared it out on social media, I was like, hey, can somebody share this with Ye, the artist formerly known as Kanye West? Because this may be something that would apply to him right now. But, you know, it could apply to him, it could not. I don't know that man, I don't know his life situation. But I wanted to share the information for taxpayers like you that may be out on the internet right now seeking out this information because what a lot of people don't realize is there are a lot of options other than settling your debt for pennies on the dollar, right? And what made me want to do this live stream today is I got a question during a consultation that I get literally every week in DMs and email, and then also when people inquire about my services. They want to know, hey, if I give the IRS this lump sum, will they just take it and that's it? The slate is wiped clean. So the technical name for that would be an offer in compromise. And that is what's advertised. You hear it on the radio, you hear it on the internet. All you have to do is offer them this and it goes away. But quite frankly, a lot of people are not going to qualify for paying that lump sum and it just being gone. And here's why. With an offer and compromise, they don't just take into account the amount of money that's in your bank account today. They also look at things like what is your ability to generate income in the future? So, how old are you? What type of education do you have? What kind of student loans do you have? Your health, those things. They also take a look at your assets, which a lot of people don't realize. So, if you own a home and you have a lot of equity in it, the IRS isn't going to settle with you for a very low amount because they're going to say, hey, you really need to pull equity out of your home and pay us. It's always going to be about your basic living needs and then pay us. And homeowners, typically, especially right now, it looks pretty good for us homeowners being able to get that equity. So if you own a home, you could still qualify. I'm not saying that's a one and done, like, hey, you don't qualify anymore. But if you own a home, if you got six figures or more in your retirement account, and I'm not laughing because I'm like, oh, six figures, that's nothing. Six figures is significant enough for the IRS that if you have that in your retirement account and you're still working, they're going to be like, no, that's not how this works. You cannot settle. You need to drain that retirement account and pay us. Hey Nisa, you are so nice. I wish I could see you too, but we'll fix that really soon. We need to link up really, really soon. The other thing with offering compromise, like I was saying, if we have somebody like me, I'm a millennial, in my 30s, college degree. I also plan on working quite a few more years, not because I have to, because I love you all. I love what I do. Filling that tax literacy gap one taxpayer at a time. because my potential to work and earn income is pretty good, the IRS likely is not going to settle with somebody like me if I actually have a good cash flow, right? So if I have money coming in, I'm able to pay my basic living needs. I'm not a good candidate for that. Like I said, this is not a one stop shop. The situations I'm naming, those are the only ways it could go. I'm just letting you know realistically, if you own a home, have a lot of equity, if you got a lot of money in your retirement accounts, those types of things, and your potential to earn is still pretty good, you probably can't settle for the lump sum. Probably means there's still a percentage chance that you could. Hey, Rue, my friend, my African queen in California, I really miss you. We need to connect very soon. But let me help the people real quick, and I'll get back to that. You and Nisa. So, with not qualifying for that offer and compromise, people, I can hear it on the phone when I talk to them. There's this deep breath, but it's not a deep breath and sigh of relief. It's like, oh, shoot, what am I going to do now? So that's why I want to talk about installment agreements, because the majority of people actually do qualify for an installment agreement. So you've seen me post before and share there's the guaranteed installment agreement for people. You're tax compliant, so all of your tax returns are filed. If 21 is not filed yet, you are not tax compliant. For the most part, you are good with your withholding, or you are correcting that. So if you work a W-2 job, that W-4 is filled out correctly. If you are self-employed, you're making those estimated tax payments. If you can pay that debt off within 36 to 72 months, you may qualify for a guaranteed installment agreement. Now, what I've told people is, honestly, up to 25,000. For the ebook, I said 10, but again, it could work up to 25,000. If that's something that you are interested in, you owe $25,000 or less, go check out the ebook. I guide you through how to do that phone call, what to say, or how to set it up online. Now, if you're like, shoot, I owe more than that, I can't pay it off in 72 months, that's fine. There is an installment agreement for you as well. See, here's the thing. A lot of people are scared of the IRS, but I heard a tax associate say this, and I think she has said it better than anyone else, Tax Bay Renee. And she says the IRS is like a bitter girlfriend, right? They're going to keep coming and coming and coming and coming. But like in any other relationship, we have to have communication. So if you communicate with the IRS, no, you're not going to get stuck in or put in prison, like Kanye said. They're trying to put him in prison the other morning. If that was the case, I can guarantee you that means Kanye and his team have not been communicating with the IRS. Don't let IRS notices stack up. Okay? If you know you owe, you need to be opening those notices immediately, as soon as they come. And when you do that, you get to be proactive and say, hey, I can't afford to pay. Let me go keep the line of communication open. The IRS wants their money. It's going to cost them more if they have to come chase you down. So you want to be ahead of the game, say, hey, this is what I can afford to pay. What will you all work with me on? Now I'm laughing because my definition of broke, your definition of broke, is completely different from the IRS definition of broke. So if you're in that situation right now and you're like, I don't have any money left at the end of the month, so I'm just going to tell them that, I strongly, strongly advise you go to my page, americasfavoriteea.com, and download the free checklist. It's the back tax negotiation checklist, and it will give you a list of things that you need to look at before you get on the phone with the IRS, because it will tell you like forms and things you need to fill out to see what the IRS would actually say that you can afford to pay. Rue says the ebook is fire, 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 fire. Now, she didn't put all those fires, but she did put the fire emojis. Thank you, Rue. I like to think that's pretty fire too, but I may be slightly biased since I wrote it. But When you look at these things that the IRS or that I have in the back tax negotiation checklist and you fill them out, you have an idea of what the IRS is thinking. So maybe you'll be in a payment plan where it's streamlined, where you pay it off in that 72 months. Maybe you'll end up being in a partial pay agreement because with the IRS, they have 10 years to collect on that debt as long as there are no tolling events. And with the tolling events, that's something that is going to add on time to what they already have to collect. So I have people now, the IRS is still collecting on debt from like 2010, 2011 because they filed their returns late or because they went through a divorce or bankruptcy. That was a tolling event that added more time. I say that because there's no one installment agreement fits everyone. So maybe you can afford to pay $50 now, but next year you have a debt you'll pay off. Maybe they'll let you pay $50 for a year. Next year is going to go up to like $175. Okay, so we have partial pay where you end up making the payments until the IRS can no longer collect, then it falls off. Or you may qualify for a step-up payment. Okay, I'm already a little bit past the time I anticipated, so let me move along. I also wanted to let you all know I thank you so much for checking out the Tax Relief with Timalyn Bowens podcast. Um, I launched it in April. It has exceeded my expectations. I'll say that. I get emails from people literally worldwide. Across the country, it was pretty cool. But now to say that, multiple people from different countries have sent me in feedback about it, it's amazing. Episode 10 goes over installment agreements in more detail. But you may be thinking, I can't settle because I have this house, I have this retirement income, but, my income situation is really shaky right now. Maybe you lost a job, maybe you're facing an illness, someone in your family is facing an illness. Check this out. Episode 18 of Tax Relief with Timalyn Bowens just released this past Friday. If you find yourself in a situation where you can barely make ends meet, according to the IRS standards, I want you to check the episode out. Now, like I started this out, I said, people face seasonal depression and those types of things. There is a section in the beginning where I share resources for people who may be facing thoughts or pressure about suicide. The reason I did that is because the suicide rates do go up this time of year for people facing back taxes and other financial strain. But the other reason I did this right now is because you have an option if you can't make payments, and it's called currently not collectible status. With this status, it does not add on to the time that the IRS has to collect. So that's awesome, right? It does not add on to the time, but it gives you a breather. And when I say a breather, 14 days, 30 days, 45 days, that's nice. You can get up to a year where no enforcement takes place. So it could be from December of 2022, if you get on the phone and do it today, till December of 2023. What the IRS is going to look at, instead of your assets and things you could liquidate, they're going to look at your current cash flow. They're going to look at your standard of living compared to the standard of living in the region you're at in the country. So for example, someone where I'm at in Louisville, Kentucky is not going to have the same standard of living as someone as Rue in California, because Rue's in California. Sorry, Rue, I'll put all your business on Al Gore's internet. But we're not going to have the same standard of living. So someone in California, even if we have the same family size, is going to be up, a little bit. It's not going to be too significantly. But the IRS is going to look at what the standard is. I'll use my family size of 3. And they're going to say, okay, for a family of 3, we're going to give you this much for a mortgage, this much for rent, this much for car expenses, this much for gas. If your car is older than 10 years, we're going to give you extra $250. And when we look at those national standards and we see that your income is already below that, you're a pretty clear-cut case for currently not collectible. Okay. In episode 18, I walk you through what the IRS is looking for. And, when you are in a situation like that with financial strain, one of the things that you worry about is, how am I going to pay for this? So I do give you some resources. I give you the number to the IRS so you can call directly. God bless you, waiting on hold right now. I give you the number to the Taxpayer Advocate Service, which is a department within the IRS that can help you with getting your account moved into currently not collectible. But the whole reason I created this podcast, or not this podcast, the whole reason I created the Tax Relief with Timalyn Bowens podcast, the whole reason I blog is because I know there is a such thing as tax needs, right? It's tax language. I start talking it, I see people's eyes glossing over. And a tax professional can help interpret that for you. You can use the resources I named. If you book a call with me, it's not going to be free. That is the only caveat. So, yes, I think it would be best if you had a professional to help you, but I understand everyone's situation is not going to allow that. And I'm not going to be the judge of your tax competence. Never. Some people get it, some people don't. So, again, I'm over my anticipated time. Nisa said, thank you for saying this. It's so real. Yes, seasonal depression from if you've lost loved ones during this time, if you're not where you would like to be professionally, mentally, just in life at this time, things happen. It can be rough. So adding financial strain to that makes it even worse. So most definitely, even if you don't listen to the podcast, if you go to the show notes, the suicide awareness hotline, I give you that number. Then also the crisis hotline. I think it's the crisis hotline. You can actually text them, because if you're like me, sometimes I need to talk, but I don't want to actually audibly talk to anyone. You can text them and get help as well. So I don't see any questions. I'm still working something out, because from the feedback I've gotten, you all do want me to actually go live about some topics. So you can ask questions. So we'll get a schedule, so we can actually be on here together to not go back and forth, but to actually interact, and I can answer your questions in real time. Again, I hope you guys have a fantabulous weekend. Have an amazing week going forward. And please, please, please share the stream, the podcast, because you're helping me to fulfill my mission to fill the tax literacy gap one taxpayer at a time. And back taxes should not ruin your life.